Welcome to Energy Unplugged, the go-to podcast focusing on the global energy transition. My name is Caroline Still, and I'm a principal in Aurora's advisory team focusing on transactions in the flexible and renewable space. I'm joined today by Ben Guest, Managing Director and Head of Gresham House Energy Transition and Fund Manager of Gresham House Energy Storage Fund, the UK's largest utility-scale battery and energy storage fund. Welcome, Ben.
Thank you very much, Caroline. It's a great pleasure to be here.
A bit of background on Ben's experience for the listeners. Prior to his work at Gresham House, which includes managing the first vintage of Gresham House's sustainable infrastructure strategy, Ben founded Hazel Capital, a solar and battery storage operator, which was acquired by Gresham in 2017. Ben has helped create nearly 2 gigawatts of solar and battery projects over the last 30 years in renewable investment, and currently serves as a director of over 50 project companies. We really are talking to a stalwart of the energy transition here, and it's an absolute honor to have you with us today. I'm keen to tap into your experience on batteries and storage. I want to unpack the crucial role flexibility plays in accelerating system decarbonisation and explore how investors can best position themselves to capitalize on these opportunities. There is a bit of a disconnect at the moment in the market between the value that storage offers to the system and the returns that can be realized by investors. And I'd love to be able to unpack this more. So kicking off, I'd like to start with a sort of higher level contextual question for the listeners before we get too carried away by the detail. Ben, can I use your expertise? Can you outline for the listeners the key system needs that batteries and storage meet in decarbonizing power and how they help renewables?
Absolutely. And thanks for the question. It's a really important one. Let's be really simple about this. What does storage do? It creates really, for the first time in terms of this generation of the electricity market, the ability to store energy. That didn't happen before in a significant way, and certainly not very cost effectively or efficiently, and allows us to do that. Now, why is that important in the renewable context? Renewables are intermittent. Basic point. They don't generate power as a function of when the demand is there. They generate power as a function of the weather. And that weather is either the solar generation or the wind generation. Really basic point. So what does energy storage do, and battery energy storage do well? It firms up the power. It's an expression in the industry. It makes the renewable power dispatchable, useful, valuable, essentially. So that is what it's doing. That's how it helps renewables. It helps really glue demand and supply together. So how do we assess the need for it? I won't go into the detail. I'm sure we will in during the course of this conversation, and probably quite soon. But the need for energy storage can be quantified. It's a function of how you quantify that intermittency and how you quantify some of the challenges to deliver power to its final customer, with the restrictions being linked to network limitations. And then finally, it's a function of the features of electricity that need to be sustained or maintained to ensure that the network remains stable. So when you're trying to feed power across a complex network, you want to avoid situations where equipment cuts out. There are outages of generation or customer demand. So really, to summarize it, there's a national need. And if there were no network issues, that would be the need. And in the UK context, that's very much a function of how intermittent the renewables are, and for how long the shape of that intermittency, how long the renewable generation is capable of over-generating well beyond its demand or under-generating well below the demand. The constraint needs, which are a function of the fact that a lot of the generation today is being installed, some of it offshore, some of it in places where it wasn't there before. So the network is not designed or built to transmit the power to the customers from their new locations. And so when they're all generating at the same time, there are what's called constraints or bottlenecks in the network. And then finally, the qualities of the electricity can be delivered by batteries and battery projects in the same way that fossil fuel power plants in the past would have delivered. And I haven't gone into the details of what those features are, but we can in the conversation.
It's a really comprehensive and interesting answer. And I think it's just useful to introduce some of those terms at the beginning of this conversation. I'd like to zoom in a little bit on the term you referred to as firming of power. because obviously thermal generation was able to provide continuous power, firm power, whereas renewables, like you said, is intermittent, and storage can help firm that by load shifting is a term that's often used, or balancing. And so I'd like to talk a little bit more about balancing overall in power systems. And this load shifting is often done in something called a balancing market, such as the balancing mechanism in the UK, but some different markets have sort of different structures. In your opinion, have we underestimated those balancing, those load shifting needs of a renewable rich system?
Probably is a short answer. The need, as I mentioned, is a function of the national need. So if we really simplify this and assume that in the relatively near term, we're going to have, because we're a bit below this today, 40 gigawatts of sort of average demand on a continuous basis. Of course, it goes up and down during the day. And you use as a rule of thumb, and this is a rule of thumb that we found holds remarkably well. It's not scientific, it's empirical, it's observed, that renewable generation can generate about twice as much as it's expected to in this country. And it's very much a feature of the generation mix of renewables that we have here. It's different in different countries because you have a different mix and different amount of sunshine and so on, different seasonality as well. And can also generate very, very little. If you have a still, we're becalmed, we're still across the UK, and it's a winter period and there's very little sunshine, or it's just a nighttime period. So there's a potential for very little to be generated. So you can do some very simple maths on that and go, well, if we're relying entirely on renewables, which we won't, just to be clear, but just to sort of simplify the numbers, if we relied on 40 gigawatts worth of renewable demand as an average, we would need 40 gigawatts of something to step in when those renewables did not generate, and 40 gigawatts worth of storage in terms of peak power, so instantaneous storage need, to absorb that excess generation if we want to avoid curtailing it. And then the need needs to be seen from a time perspective. How long in the extremes can those extreme events take place, or a relatively extreme average event? So it doesn't mean that we have crazy generation for days on end or zero generation for days on end, but sort of weak generation for days on end, or very strong generation, a gale that lasts a couple of days or something. And that need is basically very, very substantially, and is substantial. And we're probably not too far from meeting the national need in terms of where government has set its targets, especially in the near term or over the next 5 years with Clean Power 2030 targets, in terms of how much energy storage we might need. We'll probably be a bit short. Unfortunately, as I mentioned a moment ago, the network is constrained. Most of our generation is going to be offshore, off the coast of Scotland and other parts of England, and north of the areas where there are significant network constraints. And that's going to need strengthening, and I'm sure we're going to talk about that. But a great way of mitigating those network needs is to create the ability to store power on one side of the network constraint or the bottleneck, and pass it to the other side when that constraint is not enforced, so that it can meet demand. But it might need storing on the other side of that bottleneck before it's really needed, so that the storage on the generation side of the constraint can store more power and ahead of further demand. So essentially, the needs start to multiply if we're going to use storage as a mitigation for network strengthening or reinforcement. And it's an equation that needs to be assessed, and I'm sure we'll talk about that. But that is one driver of what will lead to an underestimation of the storage need, the fact that we need to break the country down into several chunks.
Yeah, that was really nicely explained. The sort of the way I heard it is that there's an imbalance over time. So load shifting of days of high generation to days of low generation of renewables. And there's an imbalance over location. And for the imbalance over time, we're probably going to be fine with the CP 2030 targets of, I think it's 23 to 27 gigawatts of storage. To be clear for the listeners, there's currently about 5 gigawatts of short duration batteries installed in the UK. Aurora forecasts that to go up to about 13 by 2030. So there's a big range of how much batteries we see going onto the system, but 23 will probably meet 99% or 95% of the weather imbalances that we get. But the locational imbalances is where you really see that being a problem. So the topic of constraints and locating storage where it can absorb excess renewable generation and then therefore reduce the need to expand the grid and the higher costs associated with that, which is really a topic that's being discussed extensively across the market at the moment. And I think you said at the end of your answer, we need to sort of understand that equation, because it is actually breaking up the UK and understanding how that trading would work is becomes very complicated very quickly. Do you think that the maths checks out? Are the power highways, the transmission lines, are they ever empty enough for long enough for a storage that has absorbed excess renewable generation in Scotland, for example, to be able to fully discharge? Or is there a risk that that storage could get stuck full on the wrong side of the constraint, for lack of a better term?
Absolutely. We need to get this right. And like all difficult problems, there's a degree of a judgment call here. There needs to be a judgment call to assess how we combine and quantify the amount of network upgrades with the amount of storage and an accepted amount of marginal and generation that will be lost. If we try and save everything, the network infrastructure and battery infrastructure that we need to build to capture all of that may be unnecessarily high. Trying to deal with the last fractions of a percentage point is sometimes unnecessary. But this is not our remit at Gresham House, but it is essential that government, NESO, and Ofgem work together to make sure that this is the conversation. I fear that too much of the conversation has been around, we just need to reinforce the network, and batteries are just enter the conversation. I remember joining a webinar where essentially it was all about the network needs with no consideration how storage can mitigate that. I think the conversation's starting to move on with the cost of batteries falling and understanding of batteries improving. But this really needs to be front and center. It's if we try and build a road network to make sure that everyone can get from A to B in 20 minutes, as opposed to needing to take an hour in the rush hour, we'd build a massively wide set of roads. At the moment, that's what we're contemplating in the UK in a network equivalent. We need to, because we can, we should store some of those cars somewhere in a car park and send them through later, or have them wait a little bit, however you want to extend the analogy. But essentially, that is unfortunately what we're doing at the moment. We're thinking about creating 20-lane highways when those 20 lanes will only be needed for a fraction of the time, and sometimes for extended periods, if were we to have very long periods of very strong generation. But that's where storage can really help and mitigate that. And the great thing about storage, just to throw this point in, is they're very dense systems. You can store huge amounts of power in very small areas. And a quarter.
Yeah, and that's only going to improve.
That's only going to improve, and that's without stacking batteries or anything. It's a great technology.
Yeah. Interesting analogy of cars being your electrons there.
Yes.
So one of the other sort of topics that's sorry to go back to grids momentarily. The risk is that we're just overbuilding these grids hugely and they're not going to be utilized enough. If we pursued that route aggressively without properly considering the mitigating strategies of storage, surely the cost of that network per user would be much higher as well, because there's a lot of time where that network is underutilized.
That's right. And I think I'll bring in a sort of a related concept, which is that through our electricity infrastructure, we're committing to a mix of different chunks of hardware and infrastructure. And, as an engineer myself, I know that mass manufactured devices fall in cost and have proven themselves to do so in solar and wind and storage, 90+% declines from peak from a couple of decades ago, and much more in the case of solar. If we commit to storage, we are benefiting from that trend. Clearly, we're benefiting from a national balancing perspective, the national need. If we also commit to it in terms of dealing with those constraint needs and think of it as a core part of our network rather than deploying network capacity, we will benefit from that deflationary trend from mass manufactured devices also in that area. If we're investing in physical network, we can be sure that those are physical assets that will need long-term maintenance and will be subject to inflation. And if we have as much of a deflationary asset mix rather than an inflationary asset mix, we will benefit as a nation in falling costs, and every nation that does this. So that's why I'm such an advocate for storage to be a substitute where it can be, or mitigant to those extra lanes of road, if you will, because when it comes to the end of life of those batteries and they need repowering, you'll be replacing them with much, much cheaper versions of the same thing, as opposed to repowering networks, probably at a much higher cost or just lots of inflationary costs. And with the network cost overall, now, I forget what the percentage is, Caroline, you might know better than me, but 30-40% of total electricity bills. If we've got to spend another 100 billion, which is the sort of number I've heard, which is going to cost, 5 to 10 billion and inflating to add on to the electricity bills. And the overall electricity bill is already 75 billion. It's a meaningful incremental percentage, which will only inflate and become a bigger stake. So that for me, the benefits of using, technologies which are on a downward trajectory on cost it makes a ton of sense. But that mix today, to the extent that we really need this network equivalent capacity, that there will be a mix nonetheless between, you do have to upgrade the networks, where you've got, for example, the famous B6 boundary at the English-Scottish border of about 6 gigawatts, which is far less than the peak generation from all the offshore wind when it's blowing a gale of probably upwards of 30 or 40 gigawatts. We will need to store a lot of that, but we will also need to sort of release that constraint. We do need to take that up. And I know that there are interconnectors planned to relieve that. And so that's a very important debottlenecking that's necessary. So not to completely trivialize network upgrades. But I do think that battery storage can provide a very useful mitigation to the extremes of 100 billion.
What I like about your answers there is you allude to the fact that this is not just a UK problem. The sort of network constraint bottlenecking is happening all over Europe and beyond. And the combination of batteries and grids and what is that golden ratio, and does that depend on what capacity mix you have is a question many minds are grappling with globally. So I'm very interested to see how we'll reconcile that equation, as you said.
Indeed. Just a quick extension to that, just so the listeners understand, this is a function of these constraints, these bottlenecks are a function of two things. One, the new locations at which generation is being installed. So the network is not there to the extent that it's needed in the new locations where generation is being installed. And then the fact that intermittency leads to overgeneration versus the need, as well as undergeneration. So you're not necessarily, at the moment, or at least historically, the network's been designed for peak demand. Here, if you don't use storage, you'll be designing the network for peak supply. And that peak supply is much, much higher, especially in the UK context, than that peak demand. And therefore, that's why you need to consider other things. That hopefully that's a useful little extension to the answer.
Really nice reframing, actually. I think I'm from South Africa, and that's a problem that the grid is having there as well, is that grid connections for renewables have been designed for peak supply, and that's straining the system. We spoke a bit about we've spoken a bit now about that excess supply for extended periods of time.
Yes.
And one can't help but think about long duration storage in that context. So storage that is sort of 8 hours and plus. So a bit bigger than the sort of shorter duration that we've been discussing so far.
Yeah.
And that's a huge topic of conversation in the UK at the moment, with the long duration storage cap and floor mechanism currently being bottomed out. Is there a combination of duration effect that we expect with long duration storage and shorter duration storage together? And do we think that's enough to meet periods of Dunkelflaute or low renewable generation, which can last longer than 24 hours? Batteries often, shorter duration batteries sort of meet those daily peaks and troughs, and long duration storage meets those 8 to 16 to 20 hours. But what about 24 to 48 to 72 hours?
Yeah. And I think this is really where the entire debate is. And to extend that to the political spectrum, this is where the lobbying also takes place. I'm putting my neck on the block a bit. This is where we see a lot of pushback on the energy transition, and especially in a UK context, because many other countries, indeed most other countries, most of the world's population will benefit from significant amounts of relatively steady solar power. And so solar, if you're vaguely equatorial, will provide the steady power year round. Come to the UK, we're relying mostly on wind, and therefore the Dunkelflaute, as you call them, the periods where you have, still dark days on endlessly, where you've got very little solar generation and low wind, is a greater problem in the UK than most other locations. We've done a fair amount of modeling on this because I don't think we can avoid it, despite it not being necessarily our core function in terms of operating and building and operating batteries. But to understand the scale of the issue, because this is where the debate has gone, we've done some modeling on this. And we get to a conclusion that, first of all, we shouldn't think of BESS and LDES as separate things. We need a significant amount of energy resource when it's not provided by renewables. And it doesn't matter whether it's from short duration batteries or long duration batteries or long duration something else, because everything can be delivered either sequentially or a 2-hour battery can be derated to deliver over 20 hours, for example, and so on. So the overall energy of the need and the overall average duration, if we do think of durations, it will be in the region of about half a day at peak power. So, if it's 40 gigawatts, it won't be that high probably, but well, excluding the constraint topic, the national need will be, 40 gigawatts for 12 hours probably is our best guess based on the current demand projections to deal with well north of 99%. The problem comes with the fact that, let's say that 99 point, upper nines, above 99.5% is dealt with through that overall fleet size, which is massively higher than where we are now, sort of 8 times in capacity growth. And I haven't done the maths on the bottom of my head, but much more than that in overall energy and megawatt hour terms in sort of energy capacity. The remaining small percentage, let's say over a decade, can happen all at once or over a small number of events. So there can be a period where there are a small handful of days. If we were to rely solely on the storage, there would be a small number of days where we're short. The good news is that we don't have to rely just on energy storage. There are other mitigants. So as soon as the network believes there is a 3-day event possibly coming, or a 4-day event where we're going to be at half power on average for 4 days, or whatever it is, we can have, extra use and prioritization of interconnector flows of the remaining gas that's online, and let that run so that we're not draining all the batteries at once first. Let the gas run to its maximum need and let it run in parallel, so we don't have a too high a peak need for backstop gas generation, to the extent that we rely on that. And there will be, of course, a demand side expectation. There's a lot of debate about this because it's typically been very expensive to encourage consumers to change their consumption patterns. However, as we head to the late 2030s and 2040s, and we electrify, as I believe we will, our transportation and our heat consumption, and probably our cooling consumption as well. It already is. It's air conditioners, and heat pumps indeed are the inverse of air conditioners as well. I believe that heat electrical demand and transportation electrical demand is far more flexible than the current demand that exists today, where you're going to turn on your oven to give your kids a dinner, you're going to turn on the lights when it gets dark in the house, and so on. So I do think that in the future, the ability to provide to source flexibility from the demand side, from those more, what I believe are, and we believe are, more flexible sources of demand, where, people can stay home if they're able to do so for work for a day, for 2 days, are able, if they're incentivized, to turn the thermometer down, or the equivalent on an air conditioner, on thermostat, I should say, for a day or two, if they're compensated to do so. And so it remains to be seen how all this pans out. But as I'm sure we'll discuss in terms of policy side, we can't continue to think that we can't live in fear of those relatively very rare and not so long events because otherwise we're going to continue with the system that we have, where we've effectively sort of done the equivalent of gluing a petrol car to an electric car rather than truly hybridizing the system. And we'll know that, we'll come on to that. So I do think that it's a bit of an uncertain journey, but we will have a highly resilient grid with a combination of storage, renewables for 99 point high nines, reliability. And then with those events which can extend for more than a certain period of time, there are lots and lots of mitigants that can be put into place. That's our analysis and belief. And of course, sorry, I'll just add one point. I'm saying 12 hours of batteries, but if the batteries get cheap enough that it makes sense to add in 20 hours worth or 24 hours, you're massively mitigating that final tail. And I think that's probably what's going to happen. I'm thinking of this in the battery price context of today, roughly, but over the next few years, and let alone a decade or two, those deflationary benefits will make that tail, sort of thinner and thinner.
That's a really good final point. I did some analysis on long duration storage in 2021, and 8-hour lithium ion was just not feasible. And now the conversation's completely changed, and that's only 4 years later. But the sort of dispatch behavior that you're referring to, so when those events come, you say that they're 0.5% of the year, perhaps climate change makes them 5% of the year. Either way, that dispatch behavior it's not all the storage at once and then all the gas. It's rather all of the capacity running slowly together for that extended period of time, working together. That needs policy change to incentivize the storage to behave like that. And really, I think a lot of the things you've said need to be considered a bit more by policy, because you've highlighted the significant value that storage can offer to the system, which I think is generally widely agreed. But how should government be thinking about incentivizing storage to behave in this manner and fixing the system to enable, I've noted, optimal storage performance? Because at the moment, you're not always remunerated for behaving in those optimal manners.
We're ready to behave in that optimal way. We're blocked from doing so. So we're in the long duration context. In an ideal system, a moment ago, we were talking about, let's not run all the storage first, because then might have a very high peak power requirement from gas for an extended period. Run it all together so that you can minimize the peak power requirement from gas, and dare I say from demand response as well, and anything else that helps, like interconnectors. Right now, it's the opposite. Right now, the priority is gas, and we'll turn on the batteries when we absolutely need them. And that's why I make that point around, we currently, if you think of the power system as a car, fossil fuel powered car, we have sort of glued an electric vehicle to it and doubled up on everything. And let me be really clear about this. What I mean by this is that we have two systems on the go right now. We have a fossil fuel powered system, fossil fuel and nuclear powered system that is so extensive still that we could turn all the renewables off today and the lights won't go out at all. That is incredibly wasteful and frustrating to hear myself say all these years later. This is a function of the fact that we can't afford to turn the gas off yet, because the regulations, the systems and the processes are not yet in place to allow the optimal running of batteries as the key source and the first source of flexibility. So when you look at how electricity is delivered in real time or in half-hourly blocks, because those are the settlement periods we have in this country, in this country, and over several days or any time period you'd like to look at, you will see that gas turbines are being ramped up and down every single day, and we're leaving the batteries to deal with residual flexibility. That is not going to get us to a place where we have 23, 27 gigawatts of batteries incentivized to be installed by 2030, and 5% of all electricity being delivered by gas, which I believe is the CP30 aim. Zero gas is too difficult, but getting down to 5% gas is the aim. That's impossible with the current system, the way it's working. Literally impossible. So we need changes, and these changes have been promised. A lot of these changes are underway and probably quite close. And when I say these changes, I'm referring to the regulations and the systems parts. I worry about the processes. But I also worry about regulations as well, which I'll come on to. So let's break that down a little bit, if that makes sense to do so. First of all, as an overarching point, it would have been great to have zonal in an ideal world, because that would create all the market signals to lead to investment decisions that lead to a lot more storage, both sides of constraints, and really with very little cost to the consumer. That would have really optimized, using market forces, the amount of storage we need either side of constraints, and then the residual could be dealt with network expansion. It would have dealt with half of the equation quite straightforwardly, and would have incentivized more renewable generation, which might not be entirely economical or optimal due to lower wind resource, say further south, but would make sense in the context of where the demand is and the avoidance of network upgrades. So zonal would have been nice, but we don't have that. So we've got to try and fix that through regulation and alternative market forces. So the first one, which I've started with, is something that's often called skip rates in this country. It's the degree to which batteries are passed over and used last or second after gas has done the vast majority of the heavy lifting. Just to sort of highlight the issues with gas, we are currently spending over £1 billion a year turning off wind and turning on gas. And actually more of the money is spent turning on the gas than turning off the wind to replace the wind when it's not generating. So we're losing free power, essentially, or power that's available and otherwise storable, and paying to do so. So we're paying to get nothing, and we're paying to replace that power when there's under generation to the low level intermittency, instead of turning on batteries. I think that's bordering on scandalous, and really should have been dealt with by now. But it is being dealt with. We have a control room that's being modernized, and to my understanding, the trading of the electricity system and dealing with all the points of demand and all the points of supply, which is incredibly complex, is now finally being automated. To date, it's being traded in terms of the balancing of supply and demand and residual needs. It's being done by human beings, and clearly that's too difficult. So delighted to believe that something called the Open Balancing Platform is now being completed to be able to trade all balancing assets, not just gas, but batteries, as optimally as possible. But there's another missing link, because to be able to have access to that flexibility, the control room owned by NESO, the National Energy System Operator, which is a publicly owned company now, needs to ensure that capacity is available ahead of time to be sure that they won't disappear. And in the case of gas turbines, it's not just to make sure that they're contractually committed, but also to make sure that they're technically available. And that means turning them on and warming them up. And that needs to be done hours in advance. So that's called reserving of capacity. At the moment, this is where the prioritization of gas happens, because they get looked at first, because if they don't look at them first and the hours in advance, they won't be available later, because technically they just will not be there in time. So this is a structural problem. And so this point at which gas is reserved, batteries need to be considered at the same time or in the same context and evaluated. And we know that batteries will be picked over gas when this finally starts to happen. When will this start to happen? Well, we're hopeful that it will happen very soon. The reason it's not happening right now is because the control room, NESO, is not able to appreciate the amount of energy in the battery, other than just ballpark assuming that it's about 30 minutes. And why is that? Because they simply haven't got access to the data. So a very simple change, what feels like a simple change but has taken years to put through, is about to come through to oblige storage assets to communicate the amount of energy they have in them, enabling the system operator to finally reserve this capacity at the level that it's available at, rather than some assumption. And hopefully, and this is the process point that I'm nervous about, hopefully this will lead to a change in behavior and the use of storage, if it's competitive, which I'm confident it will be, to both provide that flexibility and reserving of that flexibility hours in advance, and start to chip away at the enormous use of gas, which is ramped up and down to the tune of many, many gigawatts every single day, and essentially beating batteries' lunch and business model, and slowing decarbonisation and adding to costs. There's a long answer, but it's a really, really important point.
No, it's such a good point. It's the sort of, I like to think of it as the automation of balancing. At the moment, you just had to turn on gas plants. It's been relatively easy. But now you're turning on assets that might not be full and you don't have clarity on it, and you need an automated system with lots of data to be able to aggregate these smaller assets. It's complicated, but not beyond.
Not the realms of computing power, or compute as it's popularly known these days.
Exactly, yeah.
And we've got a fully automated air traffic control system. We've got lots and lots of other systems that run like complex algorithmically driven systems with huge amounts of data points, which are mission critical. Sometimes lives depend on them, whether it's hospitals or airplanes, in terms of their efficient running and the very high uptime. This is eminently possible, and it's just that hopefully this particular system and area of the economy can be brought to the modern age very, very soon.
So you've really painted a picture of this imminent growth of battery revenue through sort of this automation of the system. The system is being encouraged to dispatch in a way that benefits the system and being remunerated accordingly. But at the moment, that isn't really the case. There's a shortfall between system value and realized return for a lot of market stakeholders. How do you think investors should be positioning themselves to take advantage of the value flexibility has today and going forward? We see a lot of tolling agreements in the market at the moment, so sort of rental agreements that sort of offload the risk. Do you think this is a sign of the market evolving so that the natural owners of these assets are actually traders? Or do you think this is just a sign of the market weathering the sort of lower returns at the moment, knowing that there'll be a significant increase as the market reforms?
There's a couple of parts to that, and I'll cover those as efficiently as I can. So the value is there. If the need is there, the value is there. We have, again, modeled to some degree and through some other experience, got a good sense of what the economic returns would be for batteries as long as the changes we just discussed come through. And indeed, Aurora's own forecasts, reflect the anticipation of these improvements. And I dare say the consultancy industry as a whole has brought down those forecasts, suggesting that there's not just in the very near term, waiting for those improvements to come through, but over the longer term as well, perhaps worrying that those improvements might not come through as efficiently as hoped. Let's see what happens, but there's possibly upside to those forecasts if the changes come through really efficiently. This is our view. So let's see. The value is there, but if the improvements don't come through, those revenue forecasts will be wrong, and the investment returns will be not as attractive as anticipated. And the worry that those forecasts are wrong, just the possibility that they are, is causing concern. So it's really important for NESO in particular, who's implementing most of these changes, but also supported by Ofgem and government, for these national stakeholders to commit to targets. That's the main thing that's been lacking. So there are forecasts provided by the industry, set by an assumption as a function of the changes that are coming, but there's been no forecast provided. And I think it would be very, very helpful for NESO, government, Ofgem to set targets for the improvements that are coming. In other words, if we implement this change to see what the energy is in a battery and be able to dispatch it and reserve it and then dispatch it, in direct, level playing field competition with gas, there needs to be an assessment of what happens to those skip rates. Not necessarily an economic target in terms of how much money we make, but the percentage of time that would be used, as opposed to, at the moment, just to be clear, we're utilized about 20% of the time that we're available and competitive. How much does that come down if we implement one change, another change, and so on? So OBP, the state of charge, which is called GC166, and so on. So we need some targets. And that's number one. In terms of floors and tolls, and I refer to floors because they've actually become more common than tolls. Both of those require the trading counterparty to guarantee a level of revenues. That's a positive development because it means that larger trading counterparties, especially larger investment grade trading counterparties, are now confident that they can underwrite a level of revenues, especially at floor levels. Tolls are obviously riskier and therefore less popular with counterparties and therefore for shorter periods as well. But at least at a floor level, you can see a level of contracted revenues. There are no subsidies in this space, so we have to rely on other forms of contracted revenues. We have capacity market contract revenues, which the people who know about the industry will understand, but that's a small percentage of revenues. We need to add to that, and the benefits of putting in floors is that we reduce our cost of capital. We reduce the risk of tail events, as we did actually see last year, which led to stress in the battery sector, which hopefully won't repeat, but it led to stress and distress in a couple of cases, not necessarily listed projects. And that was a function of the regulatory process and system shortcomings coming into effect and leading to much lower revenues than were expected. So the developments that we're seeing here are really positive. I think it's a sign of the maturation of the industry, of the larger companies and counterparties to battery operators really stepping in and supporting battery projects through this underwriting of minimum levels of revenues, which improves bankability. And they're committing for the long term because these floors are 10 years plus. And they're sort of effectively highlighting that this industry is here to stay. It's not just a sort of occasional fly-by-night area. It's actually central to the system.
Yeah, that is definitely, I think, the outlook that Aurora shares as well. It's interesting to see the market evolving so rapidly. And we're seeing this reflected across Europe as well. I just have one final question while I have Gresham House on the podcast today. I can't help but ask what the value of a listed fund is. Off the back of the Harmony take private early this year and the persistent discounts to NAV seen in listed battery funds, including Gresham's, do you feel that all listed funds will eventually get taken private and sell down their assets?
That's an interesting question. Occasionally comes from different corners of the market. The value of any listed entity is its share price. Of course, there is another benchmark, which is the net asset value, which is substantially higher. And in many areas of especially the investment trust sector and the infrastructure related area within that is seeing share prices trade at a substantial discount to the NAV per share. That's also the case for the fund that we manage, called nicknamed Grid, because that's the Bloomberg ticker. And that's unfortunate. And I think is a function of at least the market as it stands. There's some macro factors, interest rate related and so on, that play into this. But I think as it stands, the market is discounting the current level of revenues as the only sustainable level of revenues, not the recovery in the curves. I would say that's the main cause of a disconnect. And I think what's really, irrespective of whether we do or don't, or we or other funds get taken private, that's outside of our control. But what I would say, what's really useful about having a listed entity, for the market as a whole, as opposed to ourselves using currency and otherwise, is that it's a bellwether. It's an indication of how well the sector is doing. And if you look at our share price, it's not doing well for the reasons I've highlighted. It's not doing as bad as it was. We've implemented floors, which has created confidence. We've reduced our cost of capital on the back of that. So that's a really good example of that. We have good visibility that changes are coming, but there's a lack of confidence because, unfortunately, the upgrades, the level playing field was not delivered on time. And that's led to shortfall in revenues. There we have a sort of upward trending set of forecasts, and there's a skepticism that that upward trend will come about. I really hope that we see the upgrades that are coming very soon on OBP, on GC166, and other improvements leading to a recovery in revenues at the levels that are forecast that will then show that this bellwether performs better than it has been.
It's a great answer, and I don't think I disagree with you, just sort of considering that Harmony was taken private at NAV, despite the fact that it was trading below NAV. So clearly the valuations on both the sell and the buy side agree that the market is undervaluing something here. And ultimately, the grid has to be automated, not just the GB grid, but global grids, in order to enable decarbonisation. The pace of that, though, is TBD.
And just to be clear, I think the grid is undervalued. I believe in these upgrades. I believe that they come about because otherwise we have an enormous problem. We continue to sort of glue an electric car to a petrol car instead of hybridizing and finally turning full electric. I believe that happens, but the market does not believe it. That's really the point. And so confidence is necessary. And that's why I gave the answer that forecasts, targets are really very important, and not just targets around, a technical upgrade happening, but actually a target around delivery of reductions in skip rates and utilization of storage.
Something that you can bake into a forecast a little bit better.
Indeed, with more confidence.
I'd love to continue unpacking this, Ben. There's so much to discuss here. We could go on for hours, but unfortunately our time has come to an end. If you've enjoyed hearing Ben's expert views on the transition, he is attending Aurora's Energy Transition Summit in November, where I'll be interviewing him alongside other panelists, including Niso, so we can have some more targeted questions to unpack this topic further. Thank you very much for being here with us today, Ben. It's really been a pleasure having you.
Likewise, Caroline. Thank you very much, and to Aurora as well.
That was Caroline Still, Principal in Aurora's advisory team, focusing on transactions in the flexible and renewable space, talking to Ben Guest, Managing Director and Head of Gresham House Energy Transition and Fund Manager of Gresham House Energy Storage Fund. Thanks for listening to Energy Unplugged. Do keep an eye on our podcast feed for more in-depth conversations with senior members of the energy industry. The best way to do this is to follow the podcast via whatever platform you use.